So the Fed hinted at another interest rate increase later this year. And while current interest rate hikes could deter some people from spending on some items, everyone still needs to buy food, and it's getting expensive. According to the Consumer Price Index, food prices increased 5.7% in the past year. And then companies like Coca-Cola, Pepsi, and Unilever have not only reported higher prices, but are reporting higher profits as well. Take a look. Coca-Cola reporting its profits rose 33% last quarter from the same time last year. Unilever, who owns companies like Ben & Jerry's and Dove Soap, reported a 20% profit growth in the first half of this year, and that's compared to last year. And then Pepsi reported its second quarter profits doubled from a year earlier. Still, costs are being passed on to you, the consumer. I spoke with senior industry analyst Ted Rossman about these costs and when or if we could see a drop. So companies are admitting to raising prices, yet we keep paying them, and then the Fed keeps raising interest rates. Are we just trapped in an endless cycle?
This is an important point because even though inflation's coming down, you're right, that doesn't mean we're going to roll the clock back to 2019 prices. Lower inflation just means that prices will still be growing, they'll just be growing at a slower rate. I think that's a really important point here that there's a cumulative effect to all this. The fact that we've had this inflation the past couple of years, the fact that interest rates are up. I mean, look at something like credit cards. The average credit card rate right now is about 20.5%. Most people are facing credit card rates that are 5.25 percentage points higher than they were at the beginning of last year. There's a cumulative effect to that toll.
And we are still seeing layoffs. People are still talking about a potential recession. What are your thoughts right now? Because, I mean, is this really sustainable, this cycle that we're in right now, despite this strong labor market, stable consumer spending? I mean, can the average American continue to afford these types of prices, especially if they do continue to rise?
We continue to be surprised at the resilience of consumer spending. We got a really positive GDP number today, 2.4% in the second quarter versus a 2% expectation. I think everybody continues to be amazed that this recession timetable keeps getting pushed back and maybe it won't happen at all. I think the odds of a so called soft landing, Fed bringing inflation down without causing a recession, I think those odds are rising. And I think we can look at things like the strong job market, the fact that a lot of people saved more during the pandemic. So there is still some of that dry powder. Now, of course, that's at this point more at upper income levels. But even if we look at middle income and lower income households, the debt to income ratio is actually looking pretty favorably, historically speaking. So I think the resilience of the consumer is a really important topic here. Hopefully, it continues. I think that the tight labor market is definitely keeping things afloat.
Ted Rossman there with Bankrate. Now, Rossman adds that people are still spending plenty of money on experiences like travel and concerts, while sales in the physical goods sector also remain strong.